Man, happy Thursday. This
Yeah,
is
boy.
get ready for the weekend. So this is Pedro De Leon.
And I'm Chihiro Kurokawa, and we are Beyond Stocks. We want to build a community of high income earning entrepreneurs and professionals to learn about how they can build wealth through alternative investings, thinking beyond stocks, bonds, and mutual funds.
That's right. That's right. So today's topic, I think we want to break down again, which is passive versus active investing, or for some of you guys, income, right? So there's a lot of misconception with this. So I think we're gonna start it out right away. We're gonna get to it. So Shiro, I want you to take it off, man. See what are your thoughts on this, and what
Yeah.
can you chime in?
So, a little bit about my background first. So, I was my first post MBA job. I graduated from UCLA in 2015, and I went into Toyota working in analytics. And it was cool, but it got boring, after about a year. And so I uh, decided I was going to become a multifamily investor, meaning I was going to become an active investor. I
Mm.
would do all the legwork to learn how to run those businesses, find an asset to buy, put a team together to run it, raise the capital, like the whole nine yards, A to Z. That's active investing because I'm building a business, um, putting a team together, raising capital from outside parties, hiring a securities attorney, a contractor attorney, on and on and on, all that stuff that goes into it.
Yeah.
Super massive investment of time and capital and sweat equity, right? In order to get that first deal. And then I had subsequent deals. All of them take a lot of work. And that applies to any kind of investment. I just happen to choose apartments. But reason I'm getting into all this background is because they're very commonly, this still holds to this day, like, but if anybody out of the blue reaches out to me on Instagram or sends me an email or whatever and says, hey, I want to talk to you, I talk to them. Like, I
Mhm.
have a uh, anybody who reaches out to me has a 100% chance of like having a conversation with me if that's what they want, and that'll remain the case until too many people reach out to me and it's just no longer time feasible. Anyway, a lot of these people would say, hey, how do I, wow, you syndicated a 128 unit multifamily deal, like, I want to do that. And so I would tell them exactly what I did. But literally, I had hundreds of these conversations, right? Almost none of them actually executed on that to become an active investor. Why? Because it's freaking hard, you
Yeah.
know? So, my point in bringing all this up is to say active investing is a tremendous undertaking. And I went into it eyes wide open, knowing I was picking up a second job,
Mhm.
a second career, running parallel to that job working at that big company. But a lot of people misunderstand and frankly underestimate the effort involved in doing your own deal. And so they're enamored with the idea of being an active investor, but they have no idea how hard it is. And everybody has a plan until they get punched in the face. So,
Yeah.
um,
Yeah.
all that to say, for the vast majority of people who are interested in investing in something outside of stocks, bonds, and mutual funds, the vast majority of those people are suited for passive investing,
Mhm.
investing as an LP, as opposed to creating a hedge fund for themselves, like an active trading strategy for stocks, which I actually know people who do that and do it very well. But those people are very few and far between. And most people are not suitable because they don't have the will or the time or the inclination or the capability to uh, do an ETA deal and buy a factory and start being a
Mhm.
factory owner. They're more suited to just putting their money to work. Sorry for being long-winded, man.
No, no, that's fine. One thing that I want to break down as far as like active investing or becoming an active, active business investing. Sorry, I got lost my train of thought there. So keep in mind when you're going to go into the multifamily business, or you're going to do anything has to do with raising capital. um, you got to make sure that you have your compliance. Make sure you work with an SEC attorney so they can actually write those PPMs for you when you're raising money. Making sure how to underwrite the deal, and then, which is one of the hardest thing when it comes to becoming your own active investor, is that raising money is not an easy thing. Many people probably see things on TV and say, "Oh, I can do that," but I'm telling you right now, it's not a simple thing. Shahiro and I have experience, I guess, combined together over 20 years of capital raising, and that is where people get really stuck at, because you might think people will want to invest, but it's just having that person to cut that check. It's a long, lengthy process. Sometimes you do get lucky when somebody says, "Hey, I actually have liquid money and I want to invest right now, and I've been looking around." But other than that, you have to nurture these individuals to, invest with you. So that's the active part, right? So you have to make sure that you have a good team running, like a multifamily, as Shihiro mentioned. But then also you're gonna have another team that needs to handle the capital raising if you're not doing it. If you are doing it, then you have to have systems and process to make sure this is successful. Because once you take someone's money, you want to make sure that you keep everyone in the know on what's going on with your project. So anything I'm missing?
Yeah, once you take outside money for any sort of venture, you're likely, the jargon is that you're securitizing an investment.
Hmm.
And so that's why you have to have an attorney involved. And it's complicated, man. So, but I will say this: these are all mechanics, right? Raising capital, or getting a securities attorney involved, or contract attorney involved. The mechanics are like 10% of it. 90% of it is just plain mindset and effort and grinding.
Yeah, that's very true. Yeah.
Yeah.
Absolutely. So just keep that in mind. We're not saying don't go into the active side. It's just more being aware what you're getting yourself into, because and there's so many moving parts when it comes to becoming an active investor. So
Yeah.
now every deal or every project or any type of assets are different. So one is more complicated than the other. So it just depends what it is. But it's going to take a
None of
lot
them
of
are
grinding.
easy though.
No, it's not. Yeah.
Yeah.
So, but
We're
it's gonna take
talking
some
about
grinding.
starting a venture, a business.
Yeah.
Yeah.
So, yeah.
So,
So,
which is why, to bring it to our mission with here at Beyond Stocks, is we we are geared to educating people and building a community of people who have income and they have some vague understanding they got to make their money work for them,
mhm,
but they don't know how. The only thing they know is stocks and bonds. And so we're here to create that community for you, to let you know there's a lot of ways to make that money work for you, and it does not involve you picking up a second career. Why? Because you're a busy executive, or you're a busy business owner, or you're a
mhm.
surgeon, or whatever, right? And you need your money to work for you. You don't want to open up a new gym. You don't want to open up a restaurant. That is not of interest to you. You want to focus on your craft.
Right. Yeah, absolutely. So, that is when it comes to passive investing, making your money work for you as you actively work on your job or career, whatever it is that you're doing. Right. So,
Yeah.
yeah. And, so here's something that I want to shed light with about passive investing. The pros of it is that you don't have to do anything as far as like, working in that business or in that project. You will get, updates, what's going on. That's one of the major pros to that. The other thing is that you have the flexibility to jump into different types of asset classes if you're an accredited investor. And so you can start diversifying your portfolio. So if one fails, then you have another one backing you up. Just think of it as a mutual fund, right? So that's what we always talk about, diversification. So, and also diversifying into different um, industries, right? So if you're doing multifamilies as real estate, move into something else. Let's say oil and gas, right? As an example. Now, here's the cons to that. The cons though is it's like, and it all depends on the individual, right? If you have some control issues, or you don't like really feel like, hey, I really want to be part of this, it's going to be difficult on, and it's, you're not going to have control, period. And so one of the things that keep in mind is that if you're working with an operator, questions that you want to ask is like, how often are you going to keep us updated? Is it monthly, quarterly? And if they do not, you definitely want to reach out and say, hey, what's going on? But that's something that you may not have control as well, like communication wise. So it's important to find an operator that has a system and process so they can communicate with you what they said on during, the contract. So um, go ahead, Shiro.
I think this control thing is completely overblown, right?
Mhm.
So a lot of my investors are very accomplished business owners, right? And they know if they were to put money into their own business, they get a certain rate of return. Let's say it's 25%. I can
Mhm.
buy a new machine for my business and I can earn a 25% return on that. And yet those people invest in fixed income deals that don't yield, that might yield half that,
Mhm.
you know. So the question would be, why would anybody do such a thing? Well, you pointed out, one is diversification. Number two is those people understand that this is passive investing. That there's a lot of sweat equity that goes into earning that 25% after buying that machine for their factory, right?
Yeah.
Whereas if they invest with a private equity firm or some other project on a passive or LP basis, they don't have to do anything,
Mhm.
right? They have to do due diligence. Their effort is front loaded, but once they send the check, then they literally have zero involvement in managing that business, and that's the difference, right? So uh, effort and time is money, and there's none of that after that initial period of doing due diligence.
Yeah.
Whereas if you're actively investing, right, or actively building your own business, there's a tremendous amount of time and effort and sweat involved with that.
Yeah,
So
absolutely.
so the people who own businesses who invest with people like me or with others, they understand that, and so that's why. Um, I mean, look at any successful business owner. You think they have 100% of their assets tied up in their own business? I'll tell you right now, not if they can avoid it. They're
Mhm.
invested in stocks, they're invested in other deals because they understand the value of making their money work for them um, in multiple different ways.
Yeah. One thing that I want to touch is about due diligence, on an LP side, even on the active side, as an active investor, um, due diligence is really important. So if you're going to get into an asset or you're looking to do an underwriting for a multifamily, you got to have, some sort of a knowledge in that. And this is where us and Beyond Stocks community, we're building that out where we can educate on developing more of a knowledge of how to do your due diligence and how to ask questions, so you'll be in the know and feel comfortable cutting that check,
Yeah.
so yeah. So with that, if you are, it depends on your phase in life, what are you leaning towards? This is a question to you guys. Where are you leaning towards? Active investing or passive investing? So if you mind, share with us. We'd like to know.
Yeah.
Yeah.
And just bear in mind, if your answer is active investing, then you need to be in a stage in your life where you are willing and able to really pick up a second job, or you don't
Mhm.
have a job and you're going to make this your job. There's no easy way to be an active investor.
Yeah, absolutely. So, yeah, so keep that in mind. We're not saying you shouldn't do it. We're just saying just keep in mind if you're trying to get into that, into the world of investing. So, active investing is gonna take a lot of work. It's just another second job, and an LP is more of your job or your work is to understand underwriting and how to ask questions, being updated with different types of asset classes out there because hey, it's important to diversify your portfolio. So
Yep.
yeah, so that moving to the due diligence, our second topic is about how to look at a deal, even if you're not a finance pro.
Yep.
So yeah, take it away, Shiro, on that.
Yeah. So Number one thing is to get referrals. So let me expand on that. Pedro and I talk all the time about how like you got to shake hands, you got to meet people
Mhm.
to get access to deals and learn what alternative investing even is about, right? So you got to get out there and meet people. But the way that you get exposure and get some comfort around, say, an oil and gas deal, right? You and I know a gentleman who is exiting I think it's a midstream deal, right? So he's an oil and gas guy,
Mhm.
a friend of yours, right? Uh, but like, I I wouldn't know anything about that unless I met him and chatted with him at one of our events about what he does and what even midstream is in oil and gas. And so that's how it starts to learn about these opportunities that you weren't even familiar with. And then from
Mhm.
there, when it comes to getting referrals, it's about, hey, Pedro, have you ever invested in midstream or oil and gas? Yes, I
Mhm.
have. Let me tell you about it. Or no, I haven't, but I know this guy. You want to talk to this guy and his experience in investing in oil and gas. It's that type of relationship building that gets you um, some understanding about that asset class. And really, that is it's informal, but it's still a very valuable way of conducting due diligence.
Yeah. The easy, simplest way I can say is that just imagine if you're asking someone, you need your roof to get fixed, right? And you ask around and say, hey, do you know any legit roofing company? And that's how you get it, right? Or you're gonna get hired. You're gonna hire someone, and you ask them, "Hey, have you heard of this company?" If they say yes, hey, let me tell you a little bit more about this company. What's your experience? Tell me more, right? So that's essentially is the same thing,
Yeah,
So
exactly.
yeah,
So that's first step.
mhm,
And then you want to get into deeper details like, all right, who's the operator? What's their background? What's their track record? How many years have they been doing this? How
mhm,
much success and or challenges have they had in this asset class
mhm,
um, that
yeah,
that you are considering? And what's their team look like?
yeah. In the business that I've been in the past, everyone likes to pitch the returns. What is the potentials? What is the evaluation of the business? Which is great. But can the operator actually make those numbers? That's the question. And so part of asking an operator is understanding their background. And I say this because and it's all depends on the project. But if you're working with an operator and they say, hey, I am, as an example, I was a CEO of like a SaaS company, and now they're moving into something else with has to do with HVAC designing. Can they operate, because there's so many different things that a business, an HVAC company has this difference from a SaaS company, and vice versa. So can they actually pull the trigger? Can they actually solve problems when there are fires to be put out?
Yeah.
And
So
so that's
put another way, what you're talking about there, Pedro, is returns are easy, meaning you can put them on a PowerPoint and present that to somebody in a webinar or send it in an email. But
mhm,
risk is really hard to quantify. We can't, there's no way to say, hey, if you invest with me in this project, there's a 12% risk that interest rates are going to go so high that we won't be able to service our debt. Or there's a 4% risk that
mhm,
a competitor is going to build a competing business that will eat into our margins, or et cetera. Right. And so that's the hard part. You
yeah,
can't put risks, you can't quantify it in a spreadsheet. And so we tend, uh, as LPs considering a deal, or as a prospective LP considering a deal, we tend to underemphasize the risk in the deal. That's the rub, man. That's the
y-
problem.
yeah, absolutely. So those are a couple of questions you can start off, right? The other one is timing. Here's a prime example. Let's say if you're going to be investing in a startup company, what is the timing? If they're, how they actually get and gather the information. What's the research? If they're going to get into storage or data centers, right? Is it the timing is now to invest in? Are you seeing a trend moving up, right? And so there are, if they are fitting that criteria, then something you feel comfortable with and say, okay, let's go. But anyways, asking those questions, why now?
Yeah.
Why were you starting this now? So that's something that, and let them elaborate on that.
Also, what's really important about the expected hold period is generally with a private offering, it's exactly that. It's a expected hold period.
Mhm.
Now, if you're investing in like a debt offering, then there could be a finite, defined maturity for that. Like you're investing in a 24-month loan or 36-month loan that pays you a certain amount in interest payments. But if you're investing in equity in any sort of project, it is an estimated time frame. There,
Yeah.
no operator can guarantee that the timing of a liquidity event, meaning the liquidity event, meaning that big pop that you're expecting out of this investment, which typically comes out of a sale. So
Yeah.
in our deals, we say typically what our life our hold periods of 5 years.
Mhm.
But I tell people like, hey, it might be 3, it might be 7 years. Like we believe based on the trajectory, the history of this business, macro conditions, etc., the demand that we see for purchasing these types of assets, we think we'll have your this deal terminated in 3 to 4 years. But we do not know that for sure.
Yeah.
Like that's what we expect.
Excuse me. So, that's another question to ask, right? What is the demand that you're building? What's the demand that the project that you're on? Because that's something that's going to really dictate if you're gonna, invest in a business.
Yeah.
Because if there's no demand to it, like why? I mean, they're gonna have a hard time trying to sell this product, whatever it is that they're
Yeah.
doing, right?
Yeah.
So that kind of where it jumps into the micro level, and then the micro level, and considering those two of those, right? How is the supply and demand? How it factors in supply and demand, and then also and that's on a macro level, and on a micro level is like how it's going to affect the local and then regional economics, such as multifamily projects, right? As an example,
Hmm.
and then also is it going to create jobs as well? So those are the things that you want to ask, like, what are you guys doing in a micro and on a macro level?
Yeah.
So yeah, keep that in
So,
mind.
so let's you ran through that pretty quickly there.
Yeah.
Let's break that down, right? So let's talk about macro level first. Like so when we say macro, we're talking about uh like really high level global or economic things that are going to affect the business. All right. Let's say it's a retail business that's selling widgets online, direct to consumer off of a website, right? But if there's a recession, then how are sales of that product going to be uh, affected? Is this like a need to have product, or is it like a fun or nice to have type of a product? And what's the price point of it? Like a luxury product, let's say you're selling high end, secondhand luxury goods,
Hmm.
high heeled shoes and jewelry and such. If there's a recession, then we can expect reduced demand for that product. But there's a famous example of like cosmetics. Take like a $50 lipstick, right? Sometimes counterintuitively in a recession scenario, sometimes those the sales of those products actually remain strong or even improve. And you know why? It's because of the psychology of people. Yeah, times are tough right now, but I can splurge on this thing. What? It's only $50, right? And so people will splurge on that like mini luxury, but they're not going to buy that $3,000 uh, handbag or whatever.
Right.
So
Yeah.
all that to say, these types of macro things we got to think about.
Such
If
as
interest
tariffs. Such as tariffs.
Tariffs,
Yeah.
exactly,
Yeah.
or interest rates, if they
Mhm.
change, what's going to happen to this?
Right.
Yes. So that's macro. And then on a micro, well, you recently became an LP in a distillery, right?
Hmm.
Yeah. So
Yeah.
what if another distillery opens up across the street? Pretty unlikely, but it's possible.
Yeah.
That is on a micro level, potentially a challenge. Maybe not, because as I think through this, the product is sold in stores. So Um,
So there's some challenges and something that would questions that would I ask is and I ask is like, hey, what are the challenges to get a license? The harder it is to get the license, the easier for me to say, hey, there's a chance I'm going to invest because the there's likely a low chance of somebody else doing it because there's so much compliance that you have to deal with, right? With
yeah,
opening a distillery. So
yeah.
yeah,
You know,
that's
this
again,
is a total side note, Pedro, but I
yeah.
want to mention this. I've got an investor. I'm not going to reveal the location, but
Hmm.
he lives in a major market in the United States, and there's like 6 or 8 like gaming licenses for card rooms in that entire county. And this is like a enormous county with millions of people population, right?
Yeah.
There's like less than 10 uh, places where you could play cards, blackjack, poker, etc. And he has 2 of those. He owns
Wow.
these casinos or card rooms, right?
Hmm.
So he's never going to have added. Well, I guess never say never, but certainly right now, like he has a certain amount of market share, and that is not going to change
Yeah.
because the county is not planning to issue any additional licenses. So that's a great business if you can get into it.
Yeah. That is a definitely good business. On the downturn, I heard. I don't. Most of you guys know it in Texas. If you live in Texas, what's going on right now with the THC? They're not allowed to sell it anymore. So a lot of businesses opened in Texas, selling THC products, cannabis, and that is policies can definitely affect your business, right? So
Oh yeah.
knowing, understanding policies as well to the kind of industry that you're going to get into or you're going to invest in, that's something that could keep in mind.
So Pedro, I didn't know that about THC. It is interesting around here where you and I live. Like there's a
Mhm.
freaking vape shop like
Oh yeah,
every street
everywhere.
corner. So you're saying those people, is this legislation in place already or
I
no?
don't know if you guys know. If you guys listening to this, if you guys know, let us know. But I think
Yeah.
that they're
Send us
trying
a comment.
to get rid of it, and that's going to affect a lot of small business vape companies, right? So,
Yeah.
um, versus even California, right? That's everywhere. Like there's an almost in every corner.
Yeah. Yeah.
you
So
know.
here, for context for our listeners, yeah, we live in Collin County, Texas, which is north of Dallas,
Yeah.
and there's a vape shop like on every street corner.
Yeah.
And I didn't really understand why they popped up so much. But I guess maybe we'll see a lot fewer vape shops now, based on what
Yeah.
you just said, Pedro.
Yeah. And so here's another thing too to keep in mind. If something's going to get affected, if your business is going to get affected, or the business you're investing in is going to get affected by policies or legislation changes, how is the operator going to pivot so they can secure your money?
Yeah.
Having those questions and dialogue with those individuals is important.
Yeah.
So yeah.
So, through my firm, we're involved in an industry that was massively affected by some legislation that went into effect like January 1st, 2022,
Mhm.
and it was double digit, like 10, 12, 13% hit to revenue immediately. So we had to pivot. And so legislative or regulatory risk is very much a real thing.
Mhm.
Fortunately, we shifted and were able to adapt. But yet another reason why business is hard, man.
Yeah. Adapt is really it's the key there, right, in business.
Yeah,
And pivoting all the time, right? Because you can't stay stagnant if you want to grow.
yeah,
So absolutely. Now, the other thing too to keep in mind is the team, right? Management team. I've seen this so many times where individuals have pitched their business and say, I'm the one man show. That's a no go. That is definitely a no go.
100% no
Yeah.
go.
Yeah. And I've literally seen people like say, hey, don't even pitch. You don't have a team, out the room. I've seen this in the past, right? And so be prepared, build relationships with individuals that that understand and team management is really important. And also here's another thing too. What is the each individual team member background is as well? Because I've seen this in the past where I was involved, where they hired a social media person, but they just hired just to put him a title because they wanted to raise capital, but that individual did not know nothing about marketing and social media. So, which they never, and when I saw this, I was like, this is something that is not, right. And so moved out of that project, but something that you want to be aware of as well.
Yeah.
We can ask for
And
resumes. So yeah.
And that I think has its root in a similar thing to what we discussed earlier, which is first time entrepreneurs are very excited about the prospects, but they're not really paying too much attention to the risks, right? Because nobody goes into a new venture
Hmm.
thinking, yeah, what are the different ways in which I'm going to fail,
Hmm.
or what are the odds that I'm going to fail? And so consequently they don't put as much effort into something that you harp on all the time, Pedro, which is like, do you have a CFO involved? Do you have a marketing person involved? Right? A lot of
Hmm.
people sleep on that, man, because they're not thinking about the the fact that they might fail if they don't have that expertise in house. They're thinking about getting into a new business and how exciting that is,
Yeah.
and what the spreadsheet says in terms of what they might be able to achieve. I guarantee you they're not thinking as much about payroll and HR and vendors and supply chain, because that stuff isn't sexy, man.
No, it's not. And it adds
So
up. And adds up. Yeah.
yeah. And so uh, if you are considering an investment into a venture, you have to see, this is non-negotiable. There has to be experience somewhere in that team, uh, meaning somebody has had success in that specific area, uh, and if that is lacking on the team, then don't invest in that deal,
Hmm. Yeah.
because there's way too much that entrepreneur doesn't know about that business,
Yeah.
and they're not mitigating that ignorance with the proper team.
Yeah. We have seen a lot of deals go south. We've seen a lot of LPs lose their money because of those little things like that.
Yeah.
Right. So just put that out there. Right. And we don't, and no one really talks about it. Right. So we are talking about it now because we
Yeah.
want to shed light on
Yeah. Because we want to be
that.
real with you.
Yeah, absolutely.
Very wealthy, very experienced, very smart people lose money on deals every day.
Hmm.
So inexperienced, not wealthy people getting into a business for the first time without the right team, dude, their odds are very poor.
Yeah. Very so.
The
Yeah.
odds of success are very poor.
Yeah. Yeah. Now, there are some that will, hustle and do whatever it takes. And that's a great mentality. That's the mentality you want to work with. And you have angel investors who would invest with individuals like that are in pre-seed phase, and that's okay, you know. But many of us don't want to deal with pre-seed companies, and that's fine. That's just our criteria. So everyone has their own criteria. I know people that invest in multifamily and then invest in pre-seed companies. Like that's like 10% of what their investments portfolio is, because they're waiting for the next unicorn. But it's okay, right? So everyone has their own threshold. So that's something that you may want to discuss with your financial advisor or discuss with your partner to see where you want to put your money in, and and then and execute from there.
Yeah.
So
Well, don't talk about it with your financial advisor, because they're just going to say, "Oh, I have these stocks for you." But talk about it with your community.
that's right. Yeah.
Talk about it with your people.
Yeah.
Talk about it with people like Pedro, who have experience and a network in private offerings and investments.
Yeah. So talking about private offerings and investments, if you haven't done so, if you're watching us the first time, thank you. Go ahead and sign up to our newsletter on beyondstocks.com. We're going to be having events coming up, workshops, actually, workshops slash mixers, to talk about different asset classes. And so if you're interested, sign up and we'll keep you guys on the know with our next event. So we're projecting the next event is going to be in July. And then after that one is going to be in September. So it's every other month that we're doing it. So eventually we're going to be every month. So we're going to have mixers. As of right now, it's just the two of us with our AI companions and GHL and everything that we have. So,
Hmm.
but yeah, anything you want to add to that, Shiro?
No, I think it's a good conversation, man. We want to keep it real, right? Like, we're
Yeah,
not just here to uh, gas people up. Like,
yeah,
investing involves risk, and active investing involves a lot of risk and a lot of effort. And so, um, we want people to have a sober understanding of what is the right fit for them in terms of alternative investing.
Yeah. I want to add this, and I think it's important. Someone asked me, like, what, how come you guys are doing this, right? Why is it you're not raising your own money or have a deal for yourself and doing this podcast? I want to come in a neutral. Well, that's my thing for me is coming in a neutral side, right? Without any emotions. Because when you're raising money, there's an emotional part to it. I gotta get this done. And then once you raise the money, you gotta execute. So we want to educate individuals that to go into a deal without using the emotions and more logic and understanding and how to ask questions, um, and then feel a a space where they can ask questions and say, are you going to give me an answer that I want to hear, or are you going to give me an answer that is really like neutral because you don't
Yeah.
have no part on this deal, right?
Yeah,
So
I appreciate you bringing that up, man, because like if I was out here pitching my own deals, like I guarantee you I would not be neutral. So that's why we don't do that.
yeah,
But we are happy. We love bringing on outside operators,
mhm,
which we've had many on before, right? To talk about what they do and talk about how they raise capital and how they make money and get profits to their investors. Love bringing those perspectives on.
yeah,
Right? So
absolutely.
we're not here to be greedy, I guess.
Yeah, we're not bashing anyone. Just we'll just put it out there. But if you're an operator, have it. If you follow us on LinkedIn, reach out to us, and we'll love to have you on our podcast.
Yes.
Yeah, definitely. So, all right, guys, stay tuned to the next show. But again, if you haven't signed up to our newsletter, go ahead because we're having an event coming up in July, and it's going to be awesome. So,
Beyond-stocks.com.
yeah, that's right. All right, guys, stay tuned to the next one. Take care.